Hello everybody, I'm Marilena Harilau and I will be your hostess for today. To start with, today we will have the week ahead report, followed by the technical analysis of the day, prepared and presented by our senior research analyst, Peter Yosif. After this, Emily Gozzoni, a member of our affiliate support team, will be guiding you through our platforms and explaining how you can start trading in some simple steps.
Welcome everybody. Market sentiment seems to have increased in the past few days, with a number of releases and fundamental issues causing the market sentiment to switch sides. Please note though that as these lines are written, the US employment report for May is still to be released and could cause substantial fluctuations in the markets. In the coming week, we have a number of releases and events which could shake the markets once again. As for monetary policy events, we note the release of RBA's interest rate decision on Tuesday's Asian session. In the late European session on Thursday, we highlight the release of ECB's interest rate decision, while a number of policymakers from around the world are scheduled to make statements and could swing the market's opinion. As for financial releases, after a rather quiet Monday, we note on Tuesday the release of Japan's all-household spending growth rate for April, Germany's industrial orders for April, Eurozone Sendex index for June, and Canada's trade data for April. On Wednesday, we get Japan's revised GDP rate for Q1 and the current account balance for April, while from Germany we note the release of the industrial output for April, from the UK the Halifax house prices for May, and from the Eurozone the revised GDP rate for Q1. On Thursday, we get China's trade data for May, and we also note the release of the weekly US initial jobless claims figure. On a packed Friday, we make a start with Japan's corporate goods prices, China's, Norway's and the US inflation metrics, as well as Canada's employment data, with all releases being for May, with the exception of the preliminary University of Michigan consumer sentiment, which is set for June. The USD index seems to have been able to reverse some bearish tendencies at the beginning of the week, and moving currently at the same levels the week began. It should be noted though that the US employment report for May is still to be released, and depending on the rates and figures published, could alter its direction. On the fundamental side, worries for a slowdown of the US economy or even a recession are still present and affect the markets. The warning set out by JP Morgan CEO Jamie Dimon for a storm approaching the US economy was characteristic. On the monetary front, the Fed's efforts to curb inflationary pressures are present. It's characteristic that St. Louis Fed President Bullard called for the Fed to follow through on its promises for rate hikes in order to curb inflationary pressures in the US economy. Bullard stated that the current US macroeconomic situation is straining the Fed's credibility with respect to its inflation target, which underscored the decisiveness of the bank to tighten its monetary policy. At the same time, US stock markets continued to drop as investors eyed the reduction of the Fed's balance sheet. Such a reduction would mean that less cash would be available in the market to move around, and at the same time warnings for the US economy tended to weigh. The Fed is planning on reducing its $9 trillion balance sheet in the current month, with some reports stating a reduction of $45 billion, which could possibly intensify the draining of the market's liquidity. Inflationary pressures are still high in the US economy, and the release of the US CPI rates for May on Friday are expected to gather substantial attention. Please note that April's release showed a slowdown of the current rates. A possible acceleration of the CPI rates could reignite discussions for a faster tightening of the Fed's monetary policy and thus provide support for the USD and vice versa. Besides the release of the US CPI rates, we would also note the release of the preliminary University of Michigan consumer sentiment for June on Friday, while on Thursday we get the weekly initial jobless claims figure. Please note that due to the low number of high-impact financial releases from the US, we may also see the USD issues. The pound seems to be losing ground against the US dollar this week, as well as against the euro, but is gaining against the JPY. On the fundamental level, we'll still note the slight uncertainty in the UK political scene, yet we must also note UK Prime Minister Johnson's insistence not to resign over Partygate, as expressed on Wednesday. On the other hand, within the UK Parliament, a Tory rebellion seems to be building up, with political analysts expressing worries that in case such a rebellion is expressed, UK Prime Minister Johnson may call for a snap election. We still view the possibility of this scenario as remote, yet the stakes are high and the issue should be kept in mind by pound traders. Also on a fundamental level, market worries for the UK economy remain intense. It should be noted that inflationary pressures in the British economy are considered to be high, and the rising cost of living seems to be undermining consumer confidence and creates worries for the already hot housing market. It's characteristic that BRC shop price index as well as the nationwide house prices tended to accelerate their growth. On the monetary front, the bank's intentions to continue tightening its monetary policy seem to remain present, despite the rate hikes performed being characterized as reluctant by some analysts. The raise of interest rates is expected to continue, and if actually so, could weaken the growth prospects for the UK economy even further. Please note that the UK GDP rate was in the negatives for March and that the UK faces also the adverse effects of the war in Ukraine, supply chain issues, but also Brexit. As for financial releases, we note the release of the final services PMI figure on Tuesday, while on Wednesday we get the Halifax house prices as well as the construction PMI figure, all being for May. JPY was in red territory against the US dollar for the week, but also against the euro and GBP in a sign of a broader weakness, despite a rebound being performed on Thursday. It should be noted that rising US yields tended to intensify the losses of the Japanese currency against the greenback, and the pair has reached a new 3-week high on Thursday. On the monetary front, BOJ may be able to do little against the weakening of JPY, yet overall the insistence of the bank to stick to its ultra-loose monetary policy, as well as its viewing of inflationary pressures being of temporary nature, tends to undermine the value of the Japanese currency even further. Yet we must note that BOJ Governor Kuroda stuck to the script, defending the bank's monetary policy, and stated that I don't think the BOJ's monetary policy was the factor behind a rapid yen weakening. The recent yen weakening may have been driven by an abnormal situation where oil prices topped $130 per barrel, as reported by Reuters. Yet we must credit him also with the doubts about the cost-push inflation being actually what the bank had aimed for and whether the rise of prices actually creates an increase in corporate profits and new jobs, which, agreeing with Mr. Kuroda, is not. On the other hand, the swings of the market mood may also affect the Japanese currency, as besides being a national currency, has also a role of a safe haven for international investors. So should market sentiment turn substantially more cautious, we may see the JPY getting some support, while should the market sentiment improve, becoming more risk-oriented, JPY may experience safe haven outflows. As for financial releases, we make a start on Tuesday with the release of the all household spending for April, while on Wednesday we get the current account balance for April and we highlight the release of the revised GDP rates for Q1. Finally, on Friday, we note the release of the corporate goods prices for May. The euro seems about to end the week at the same levels it began against the US dollar, yet it seems to be strengthening against the GBP and the JPY. Euro traders are focusing on the release of ECB's interest rate decision. On Thursday, the bank is widely expected to remain on hold, keeping the refinancing rate at 0% and the deposit rate at -0.5%. Yet we must note that the market may also expect a small 10 basis points rate hike on the deposit rate. Overall, the statements made by ECB President Christine Lagarde are still valid, and we note that the possibility of rate hikes in the July and September meetings seem to have increased. The bank seems to maintain the view that 25 basis point rate hikes are the way to go in raising interest rates, and the bank also seems to maintain its gradual approach. It's characteristic that ECB board member and chief economist Philip Lane practically refuted calls for a faster tightening of the bank's monetary policy and stated that quarter percentage point interest rate hikes in July and September will be its benchmark pace. On the other hand, the acceleration of the HICP rates in Germany, France and the Eurozone as a whole for May, reaching new record highs, added further pressure on the bank to tighten its monetary policy. We expect the bank to provide a confident forward guidance, probably leaning more towards the hawkish side in an effort to pave the way for a possible interest rate hike in July. As for financial releases in the coming week, we note on Tuesday the release of Eurozone's Sendex index for June, as well as Germany's industrial orders growth rate for April. On Wednesday, we get Germany's industrial output growth rate for April, and we highlight the release of the revised GDP rate for Q1. AUD is about to remain in the greens for a third week in a row against the US dollar. It should be noted, though, that the financial data released in the past few days were not exactly encouraging for Aussie traders. The building approvals growth rate, despite showing some improvement, remained in the negatives, while the current account surplus dropped substantially, implying that the Australian economy benefited less from the international payment system in Q1. On the flip side, though, the GDP rate slowed down for Q1, yet not as much as was expected by the market, and may have been the main driver of AUD strength, along with the rising trade surplus for April. From China, news were kind of lukewarm, given that the PMI figure for the manufacturing sector improved yet remained below the reading of 50, implying another contraction, yet not as extensive, of the economic activity for the Chinese key economic sector. Next week, we highlight the release of RBA's interest rate decision on Tuesday's Asian session. The bank is widely expected to hike rates by 25 basis points, yet some even call for a 40 basis points rate hike. It should be noted that a number of RBA peers have moved more decisively towards the tightening of the monetary policy, with 50 basis points rate hikes in the latest sessions, and that may be increasing the pressure on RBA. Also, another factor raising the pressure for RBA would be the tight employment market and the accelerating inflation. Should the bank maintain a clear hawkish tone in Governor Lowe's statements and or provide a stronger rate hike than expected, we may see the Aussie getting some support. As for financial releases, we highlight from China the release of May's trade data on Thursday, with Australian exporters of raw materials focusing on China's import growth rate, while on Friday China's inflation metrics may also get some attention from Aussie traders. On a weekly basis, the CAD seems to be ending its third consecutive week strengthening against the US dollar. In the past days, economic data from Canada may have also supported the CAD surge with some positive outcomes. First, the manufacturing PMI figure for May came out higher than expected, confirming the sector continues to expand within the economy. Second, and most important, the BOC implemented a rate hike of 50 basis points, affirming the intentions of the central bank to remain hawkish in the near future. In its statement, BOC stated that with the economy in excess demand and inflation persisting well above target and expected to move higher in the near term, the Governing Council continues to judge that interest rates will need to rise further. On the other hand, Canada's greatest exporting commodity, oil, traded higher on both crude and Brent, with the barrel price moving to new weekly highs. Oil prices have to trade of moving the CAD in the same direction, and we would not be surprised to see both instruments ending the week positive. In the following week, we have a rather interesting economic calendar for CAD traders to work with. On the 7th of June, we get the April trade balance figure and the IV PMI figure for May. On the 10th of June, we also get the very important Canadian employment report for May. As a side note, during BOC's recent interest rate decision report, the central bank noted that the country's employment market continues to face challenges, with open job vacancies coexisting with labor shortages. These subjects seem to highlight an axis in demand and also a gap in the ability to bring forward the necessary supply. As closure, we would like to note that we expect the US dollar to relent some of the initiative over the currencies, given the slowing frequency of US financial releases in the coming week, yet the US CPI rates for May are still considered to draw substantial attention. Particular currencies may come under the spotlight at certain moments and act independently. For example, the Aussie and the Euro could gain on attention at the release of RBA's and ECB's interest rate decisions, respectively. We would like to highlight, though, the market sentiment that had considerable swings in the past few days, turning from positive to cautious and then to risk-oriented once again on Thursday. We would not be surprised to see similar swings in the coming week as well, which could create a nice blend of trading opportunities, and given the lower number of high-impact US financial releases, possibly even a more balanced one. On the other hand, US stock markets could benefit from an improvement of the market sentiment as stocks are considered to be riskier assets. Yet we would also pay close attention to the path of US yields. A possible rise of US yields could also provide an adverse effect not only for US stock markets but also for the non-interest bearing precious metal, gold, that tended to reaffirm its negative correlation with the US dollar in the past days, and we would expect the relationship to be present in the coming week as well. So welcome everybody to the technical analysis part, and we make a start. We had made a promise yesterday to make a technical analysis practically live for a financial instrument regarding stock markets. We have in front of us practically Nasdaq's. This is the 4-hour chart, and we can see that the index has been moving in a sideways motion. It was characteristic that yesterday the index rose quite substantially, I may add as well, and seems to be moving in a sideways motion between a resistance line right here, which is the 12,935, and the support line a little bit higher, $12,440. Let's label them. And yeah, one. There you go. So we expect, given that the price action respected the 12,935 and also the 12,440, we expect the sideways motion to continue between the two boundaries we mentioned. The RSI indicator is above the reading of 50. Actually, the mid's between 50 and 70. It's at 58.81 right now, but it's slowly dropping, implying that the bulls are losing steam. Thus, the price action could correct lower once again. That would be in line with the expectations for a sideways motion. Let's also add the Bollinger Bands here. Indicators for trend. 2 standard deviations with the 20-day moving average being the midpoint. It's a nice, beautiful movement. How practically the Bollinger Bands describe the low at the low point and the highs at the high boundary. It's like the price is rotating between this level. Let's see what we would have to the upside, and should the bulls take over. We have one level here. that's at 13,565. The next resistance level would be far higher. Being placed at, let me have a second look at this. $14,275. Let's move to the downward. To the downward movement, I see a support line here. It's somewhere here in this area. $11,115. We could go lower. 110 maybe. Still lower. $12,100. Yep. 12,100. Let's label this before talking a little bit about this level, because it seems to be quite interesting. It seems to be like a mid. Here you go. Seems to be like a mid support level, but note how the price action respected it once here as a support line and twice here as a resistance line. I understand it has been broken a couple of times, but I wouldn't miss out on this one. And the third one would be at the low point. Being at 11,490. Sorry about that. Let's correct this. Here you go. There you have it. Practically, the index has been moving since the 27th of May in a sideways movement between the 12,935 and the 12,440. We tend to maintain our bias for a sideways movement as long as the price action of the index remains between the two pre-mentioned boundaries. Now, for a bias for sideways movement to switch in favor of a bullish outlook, we would require clear breaking of the 12,935, which practically consists the upper boundary of the current sideways movement, and for the index to start moving towards the 13,565. So an ultimate target for the bulls, we set the 14,275, which is practically also the highest level in our chart from the price action. To the downside, to switch the sideways bias, we would require clear breaking of the 12,440, and for the price action to actually aim, if not reach, the 12,100. Now, as we have mentioned, the 12,100 provided resistance here and support here. Lower than that, we also note the 11,490, which is also the low point in our chart right now. Pretty nice. Now let's have a look also at Dow Jones. Okay, we can see that there is a similar movement. However, this one is the 1 hour chart. I would prefer to see the 4 hour chart. Let's have a look. Yeah. That gives me more resistance support lines to work with. Also in sideways movement. I'm placing it somewhere here. The main reason is that we have practically double touch here. At a force break. Let's label this being at 32,575. And the R1 being, let me readjust this, 33,325. We could have set it a little bit higher, given this peak here. But I think that there was more testing at this level, this support line as well. So I would be preferring the 33,325 here. Okay. Let's also put the second resistance line here. Test it once, twice. Actually pretty intense. And that's being placed at the 34,105. Ultimate resistance line at the peak. Definitely. But it's pretty wide. Let's have a second look. Let's go back. Oh, there's another one. Somewhere here. See the double touch? Once, twice. I'm keeping this one. And we can place this as the R4. Yep. Now this is being placed practically at 34,890. And then tend to stick to it. The peak could be the R4 as well at 35,525. It's beautiful. Okay, let's now set the support lines. We have placed already the S1 at 32,575. The S2 is now being placed at the 31,900. It could go even a little bit lower. I would place another support line here. And the fourth here. You can see the peaks. Actually, this one could be a little bit higher. Somewhere here. where we have 1, 2, 3 touches. This was repeatedly tested, so seems to be respected by traders. 31,345. Yes. And the lowest level would be at 30,625. That's way off. Yeah. I understand it's not perfectly symmetric. It doesn't have to be. You don't have to have equal spacing between the resistance and the support lines. On the contrary, you should chase after the peaks and troughs, which practically tend to verify that a certain level in the price action tends to create either substantial support, practically reversing the selling momentum for a support line, or on the flip side, substantial resistance, thus reversing the buying power. Once again, our bias for sideways motion remains. That's for Dow Jones. We are currently in the 4-hour chart. Tend to note that the range bound movement is a little bit wide. That's okay. And we expect it to be maintained between the 33,325 and the 32,575. We have to note, actually, yesterday we were expecting both the Dow Jones and, let me show you, Dow Jones seem to have this downward trend line. And we actually expected the price action to break below the 32,575 and start aiming for the 31,900. But the market sentiment changed, and changed substantially. It turned practically from a cautious market sentiment to a more risk-oriented, and given that stocks are considered to be more, if you prefer, riskier assets, they got some support, practically regaining ground and reaching as high as the 33,325. So given also the breaking of the downward trend line, which had started to form over the past 2-3 days, we tend to maintain a bias for a sideways movement initially, a little bit wide. I understand that, between the 33,325 and the 32,575. Now, should an extensive buying interest actually break the upward trend line, the upward resistance line, which is the R1 33,325, and the price action of Dow Jones starts aiming for 34,105, that would cause us to switch our bias for a sideways motion in favor of a bullish outlook for the index. Higher than that, we would also note the 34,890, which provided resistance earlier in the year, while the highest level noted would be the 35,575, which peaks here. Yeah. To the downside, we note the S1, which was respected here once, twice, also as a resistance line here, the 32,575, and an intense selling interest, which would break it, would actually force us to switch our outlook, our sideways bias outlook, in favor of a bearish outlook for the index, in which case we note as the next possible stop for the bears the 31,900, which was well respected here, here, and as a resistance line here. I would also note this as a possible testing ground. Lower than that, we also note the 31,345, which was tested once, twice, also here. And even lower, which is the lowest level in the price action, would be the 30,625. Definitely though, I know it's not technical, but I would watch out for the release of the US employment report for May later in the American session. It could alter the direction of US stock market indexes, as it could also alter the direction of gold and definitely the US dollar. So let's have a look at the third US stock market index, and this would be the S&P 500, the 1 hour chart. Let's switch this to the 4 hour. That's better. It's interesting how practically the whole picture changes as we have practically the idea here that this price action moved upwards and then stabilized. But if you look at the 4 hour chart, then practically you can see that the upward movement was a correction. There you go. There was a wide drop from around the last day's 22nd of April here until the 23rd, 24th of May. If we drill even more out, that's even more interesting, right? It's even more intense. It shows us that the drop actually started around the end of March. Back to the 4 hour chart. Downward movement interrupted. Upward movement also interrupted. Stabilization seems to be in play here. I would actually skip this part and move it closer to the price action. So let's have a look at the levels. We make a start. This would be possible. Yeah, yes and no. We have a touch here, a touch here, and a touch here. Let's have a look a little bit lower at the levels noted yesterday. It's also pretty valid. Resistance here, support here. Anything in that area could be valid practically. Let's stick with this one as it's the most recent. And that would be the 4,190. In red, please. That is the resistance line. Let's label this 4,190 in bond font. Makes it easier for the eye to catch it. Higher than that, I would also note this level. A nice resistance line here, again tested here. It's a beautiful resistance line, people, well respected. And that would be the 4,305, 1,405. Let's label this. And even higher, the most obvious part is this one. But in my opinion, that's too high. That could be an R4. There has to be some level in the middle. Let's have a look a little bit back to. Okay, here you have it. Could be placed here, which was a prior support line, or here. Actually, I would prefer this one. I know it's pretty close to the price action here, but the fourth one here. You have here 1, 2 support points. Here you have resistance points. It was extensively tested, so that should make it valid. Also, there could be another level here. Yep. I would prefer this one as a resistance line though. Okay, let's label this. This would be the 4,390. Locked as well. And the R4 would be the 4,515. Okay. Now we have noted that the index is moving in a sideways motion. We have mentioned practically possible resistance lines. Let's chase after support lines as well. There you go. At 4,075. Even lower than that. I would also note this level. It's a prior resistance line, I know it, but in my opinion, given that the price action has turned higher, the resistance line now turns into a support line. Also note that it was tested to the downward here and here. It would be at 3,985. Last but not least, now we have 2 points here. One, you can see the touch here, a bit lower, and another far wider. Actually, I would prefer this one, although this one's good as well. See how the price action had an intense downward movement and was stopped, reversed practically at the 3,861. It could be this one as well. And that was repeated as well here. I'll keep this. $3,860. There you go. So we tend to maintain a bias for sideways motion given that the price action of S&P 500 practically bounced on the 4,075. That was the day before yesterday. We can have a look. No, actually it was yesterday, and reached as high as the 4,190. So the levels of the sideways movement, maybe with a slight exception here, nevertheless seem to have been respected by the price action, and those could be the boundaries of its sideways movement for now. Should the price action find actually extensive buying orders along its path and turn higher, we may see it initially breaking the 4,190, which provided resistance today in the Asian session. Higher than that, we note the 4,305 for the bulls as next target. So we would require clear breaking of the 4,190 in order to switch our sideways bias in favor of a bullish outlook for the pair. Sorry, for the index. And for the price action to start aiming for the 4,305. Should R2 be broken, we set as the next possible stop the R3 4,390, which found some support here and has now been turned to a resistance line. Okay, to the downside. And should a selling interest be expressed, substantially expressed, we would expect practically the price action to break below the S1 4,075 and start aiming for the 3,985, which, yes, it was a resistance line once, twice here, but it was also a support line. So it was tested on both sides. And lower than that, we note the S3 3,860 providing support once, twice. Actually, in both cases, it was able to reverse a steep downward motion. This one was especially steep downwards. Okay. Now, given the release of the US employment report for May in today's American session, I would like to have a look also at the USD index. The USD index, which has broken, note how the price action has broken the 102.05 and is moving now downwards. However, there seems to be some stabilization of the index. The index, mind you, describes practically the movement of the US dollar against a number of its counterparts, major pairs. We tend to maintain a bias for sideways motion initially, but the release of the US employment report could alter this picture. And should the release as such excite traders, we may see the US dollar getting some support, especially should the NFP figure drop less than expected, or maybe even rise, while unemployment rate continues to tick down, implying some tightening of the US employment market. Nevertheless, should the US dollar get some support, we would initially expect the index to break above the 102.05 and start aiming for the 102.75, which provided resistance here, support here, and some support here. On the flip side, should the US employment report actually disappoint traders, say for example, should the NFP figure drop more than expected and the unemployment rate fail to tick down, we would expect the price action of the USD index to actually break, besides the S1 102.05, which was broken yesterday, to move lower, break the 101.30, which provided support here, and start aiming for the 99.80. It's a wide difference, I know. I'm not expecting it to cover it, but at least I would like to see the index aiming for the 99.80. Doesn't have to be that it reaches it. Also, another short look. I would like to throw another short look at gold's price. That's interesting. Now, gold's price had upward movement, which continued yesterday. Practically, gold's price was able to capitalize on the weakening of the US dollar, as shown in the USD index. Note the negative correlation between the USD index and gold's price, given that whenever the USD index is on the rise, gold's price tends to drop, while on the flip side, should the USD index drop, we may see gold's price rising. It's not always present, but yesterday it was. And actually, during today's European session, it seems to be still present, as we have the USD index Let me have a show of this. Note the slight rise in today's European session, and in gold's price, note the slight drop. So that's something leading gold's price as well. Now, should the US employment report be bullish for the US dollar, excite traders and have better rates and figures than expected, we may see gold's price retreating as the US dollar may be strengthening. Let me readjust these. Now, to the downside, and I know it's wide, we expect gold's price to drop should, once again, the US employment report actually support the US dollar. And we may see gold's price dropping, aiming for the 1833. However, there may be a middle level somewhere here. Note the testing once, twice, 3 times here. So it's a level which traders tend to pay attention to, and that would be the 1847. No. Lower than that, we note the mid level. So let me just drop the lines. The one which has been definitely tested a couple of times, support, resistance, support, would be the 1833. Lower than that, we have the 1807, and even lower, the 1787. To the upside, and should gold's price get some substantial support, we would expect the price action to break above the R1 clearly, not like during today's Asian session, late Asian, early European session, which practically constituted this is a false break mostly. Anyway, we would expect a clear breaking of the 1870 resistance line, and for gold's price to move higher and start aiming for 1903. It's a very, very interesting chart. Let's have another look, because let's have a look also at WTI. You know, OPEC's meeting was yesterday and actually moved the price action, considerably higher. Note how the price action of WTI rose, broke the 113, beautifully tested the 115.80, and seems now to be stabilizing between the 115.80 and the 113. The next level for the bulls would be the 118.50, providing resistance here. To the downside, should an extensive correction take place, we may see the price action of WTI breaking the 113, and that should read 110.30. Okay, and to correct 1700. Yes, should the bears take over, we would expect the price action of WTI to break below the 113 and start aiming for the 110.30. Beautifully tested once, twice here, and that's a resistance line here. Extensive testing over the round. So that should be it. From all of us here at IronFX, best wishes for solid trading.
everyone, my name is Emily and welcome to another short walkthrough of our website. Today I want us to go through a little bit about our platform, so let's get started. Here you see our home page and I want us to go over here where it says platforms. Let's get started with the MT4, also known as MetaTrader 4 trading platform. So depending on your preferences, you can choose either Windows, Mac, iOS, Android, or WebTrader. Then we scroll down. What is MetaTrader 4 for Windows? I'm going to read this. This is more for our unexperienced traders because someone who has experience, I'm sure that he already knows what is an MT4. So MT4 is one of the most reliable and popular platforms available and provides essential tools and resources needed for successful online trading performance. Register and trade over 300 financial instruments in forex CFDs, spot metals, futures, shares, spot indices, and commodities with quick execution. Experience trading with spreads as low as 0 pips, advanced trading signals and functions in our user-friendly platform created specifically for online trading. Trade forex CFDs and spot markets from your desktop with MetaTrader 4. From here you can click and download it. Here you see MT4 is supported by Windows, Mac, iPhone, iPad, Android, and any internet browser. Moving on, we see over here MT4 Windows Trading Futures, MT4 Windows Quick Login, MT4 Windows User Guide, MT4 for Windows Frequently Asked Questions. So if you scroll down, you can also see why trade Forex with the IronFX MetaTrader 4 and what is MetaTrader 4 Advanced for Windows. Moving on, we see the advanced trading features, the Windows Advanced Quick Login, and over here you have the user guide. This is very helpful for someone who has no experience. And then moving on here, what is MT4 multi-terminal for Windows? Multi-terminal trading futures, multi-terminal quick login. And again, over here, you see the user guide. This is extremely easy to learn. You don't need to be stressed or afraid of it. And as I said many times also in our previous lives, that whatever questions you have, you can always come back to us and we will assist you. Then I want us guys to move on to the web trader. So again, it's MT4, but it's web trader this time. Again, it's being supported, as you see. And if you scroll down, what you need to do to access the MT4 web trader trading platform. Here you have all of the details. If you don't have one, you can click over here to open one. To access the MT4 web trader, all you have to do is simply enter your details as well as your IronFX login and password you used to sign up. Select the trading server and click the OK button. You can now trade easily and with convenience directly on an IronFX web page. After logging in and successfully connecting to the selected server, you will gain instant access to your trading account and you will be able to start trading the markets. Again, you see over here, WebTrader is supported by Windows, Mac, iPhone, iPad, Android, and any internet browser. Scrolling down, why launch the MT4 WebTrader for browsers? You have the features here, how to use the MT4 trader. This is very important if you're planning to use the web trader. And again, over here, you have the frequently asked questions. Now I want us guys to move on to the VPS hosting. Free VPS hosting for trading forex CFDs. So what is VPS hosting? Let's read that together. The virtual private network market has grown considerably across various industries and is expected to register a compound annual growth rate of 15% by 2024, according to the research story and markets.com report. The increasing demand for the encryption of sensitive data and security has made VPS hosting an attractive and essential offering. Instead of using your own computer to trade directly, IronFX provides you with a VPS so you can connect to your MT4 from anywhere with an internet connection. With a VPS, you do not need to monitor your automated trades as they can be executed while your computer is turned off. IronFX VPS hosting provides the speed and security you need so you trade forex CFDs with confidence. You can rest assured that your system and trades are at all times as protected as possible and as quickly transmitted, avoiding delays and slippage. Join us and get the most out of our free VPS hosting offer to ensure you're getting the maximum benefit from trading with us. Over here, you can register, you can see the terms and conditions. This is very important. You should go through it. And then over here, we have how does a virtual private server work? You have the bullet points over here. Then we scroll down to advantages of VPS hosting for forex trading, powerful and secure hosting. And that's it when it comes to the VPS platform. Again, if you have any questions, don't worry. We will go through them with you at the end of this live. You can always contact us. And I want us to move on to the PMAM. So, PMAM stands for Personal Multi-Account Manager. So, here you have the benefits and trading features. So the IronFX PMAM software makes trading easier to manage, taking the stress out of handling multiple accounts. It allows the trader to focus on trading through the MetaTrader 4 master account, as PMAM takes care of all the other processes involved. Here you have the user guide. You can manage orders, positions, and equity online, one-click order entry, manage unlimited accounts, monitoring of financial instruments prices and forex rates, activity reports, and it's supported by Microsoft Windows 98 or higher. Here you have the PMAM allocation methods. You have the lot allocation, percentage allocation, proportional by balance allocation, proportional by equity allocation, equity percent allocation, allocation by equal risk, percent allocation by PI, and proportional allocation by PI. And over here again, you can download the user guide for PMAM. And that's it when it comes to the PMAM. And last but not the least is the trade copier. So the trade copier is an amazing option for someone who has zero experience or for someone who has zero time to trade. And I will explain to you why now. So I want us to scroll down and see what is a trade copier. Trade copier allows you to copy the strategies of top performing traders in real time. If you are a beginner to Forex or simply you don't have enough time to spend on monitoring the markets, then this is an ideal solution to get you started in trading. With IronFX's trade copier, you can start copying other traders, benefit from their expertise, and expand your own portfolio. So you have two different options right here. You can either sign up as a strategy follower or as a strategy provider. First, I want us to go through the strategy follower. So if you don't have enough knowledge or time to trade on the forex market, then you can follow the footsteps of an experienced trader. You can start copying basically their strategies and then create your own portfolio. When you first register, you can select only one strategy provider, but later on, you can follow more strategy providers through the Trade Copier platform. You can easily withdraw your funds at any time. Here you have the steps. And here you can register. Super easy. It takes 2 minutes max to do that. Then I want us to go to the strategy provider. So if you are a professional and successful trader, then it's time to try your hand at the Trade Copier as a provider. With IronFX, you will gain access to all the necessary tools to get you started and to instantly connect with traders from around the world. As a smart trader, you can now put to work your trading experience and let others learn by following your trading strategies. So here you see the steps. Trade and earn from your strategy followers. You have strategy provider, strategy followers, higher volume, and performance fees. Again, you can easily register through here. And that's it about the Trade Copier. And I think that sums up everything today. As I said numerous times, I want you guys, if you have any questions, or as I said, if it is not enough for you, if you need more information, please, at the end of every live that we have together, I want you guys to contact us. I want you to either email us or just click over here to our live chat and chat with us, and we'll be able to assist you with whatever questions you have in mind. So that's it for today, guys. Thank you so much for joining me once again. I wish you a very, very nice weekend, and we'll be in touch. Have a good one. Bye-bye.
This was it for the day. Thank you all for joining us. Remember to catch us again next week, every day from 12 to 2 p.m. Enjoy your weekend. Thank you.